I think that I was relatively positive about U.S. stocks since March 2009. I haven't any short positions. I haven't been shorting any stocks since 2009. But the U.S. marches up, consumer confidence marches down, and emerging markets are performing badly relative to the U.S. The dollar is strong, indicating tightening of international liquidity. And so I don't think that the U.S. market will go up a lot from here. I rather think that there is now considerable downside risk.
Marc, you have a unique perspective on continental Europe, Switzerland, Germany, and the rest of the cacophony right now. Just your thoughts on the past week and a half that we've seen. Can Europe repair its house?
They can repair it, and actually Europe has now a current account surplus, which is positive. But obviously the economy is contracting. We are in recession in Europe, and this will have an impact on the corporate profits of U.S. corporations as well, because say 40% of S&P earnings come from overseas, but the bulk actually comes from Europe of those 40% and not from emerging economies. And so I think that corporate profits in the U.S. will continue to contract, as they have actually, according to S&P, contracted in the fourth quarter of 2012.
If you're looking at doom and gloom, Marc, you have to obviously be owning gold. Why hasn't it held up as a safe haven?
Well, you see, when you print money, the money doesn't flow evenly into the economic system. It stays essentially in the financial service industry and among people that have access to these funds, mostly well-to-do people. It doesn't go to the worker. Now, I just mentioned it doesn't flow evenly into the system. Now, from time to time, it will lift the Nasdaq, like between 97 and March 2000. Then it lifted home prices in the U.S. until 2007. And then it lifted commodity prices in 2008 until July 2008, when the global economy was already in recession. And more recently, it's lifted selected emerging economies, stock markets, Indonesia, the Philippines, Thailand, up 4 times from the 2009 lows, and now the U.S. So we're creating bubbles and bubbles and bubbles. And also this bubble will come to an end. My concern is that we're going to have a systemic crisis where it's going to be very difficult to hide.
Okay, Marc.
Even in gold will be difficult to hide.
Marc, my final question to you is simple. Within your report and the great caution that your readers look for from you, we've just seen bank accounts raided in Cyprus. Does this set a precedence for Europe, or is it a one-off event in Cyprus?
Well, MF Global, the depositors were also raided. It's nothing unusual. And philosophically, I believe that we shouldn't have deposit insurances, blanket insurances by governments, because it would force savers to be very careful with which bank they would deposit the money. And so the good banks would pay very low interest and take low risks. And banks that take high risks, they would have high interest. By the way, in Cyprus, banks were paying very high interest. Like in Lebanon at the present time, I can get 6% on my deposits. So the depositors should have known something is dangerous. But I would say the principle now is very important to understand. Until now, the bailouts in Europe and in the US were at the expense of the taxpayer. And from now onwards, in my view, the bailouts will be also at the expense of the asset holders, the well-to-do people. So if you have money, like I am concerned, I am sure the governments will take